Hey everybody, it's Brian from quantlabs.net. Welcome to our, I guess we'll call it Traders Club for March 2nd, 2015. So, as you know, I'd like to keep technology out of this as much as possible, even though we were talking quite a bit of it a little bit ago. Let me just give you an outline of what we're trying to do tonight. I'm going to try to hopefully do this more on a weekly basis. Done enough vendor stuff in the last little while, so I want to focus more on pure trading. A lot of people seem to be more interested in that. All right, so what I'm going to do is I got 6 little questions for you. I want to keep it open-ended. I'm just keeping it really loosey-goosey for you. So let's talk about the first one today when the NASDAQ hit its peak for today. I don't know if you guys have seen the comments from Bill Gross. He said that we're hitting a bubble. I'm looking for people's opinion on that. Let me know what you think. You think we're hitting a bubble? This is from Bill Gross. I watch a lot of Bloomberg, but this is on Yahoo Finance. So let me know what you think. I think we're hitting some form of a peak at some point. Anybody got any opinions? Go ahead, Shalom.
What does he mean by a bubble? A bubble, by definition, means that there's fair value for the asset, and that the current price is like way over what the fair value for the asset is. So, is he just talking about technology stock, bonds, or?
No, he means overall. He's referring to the whole Nasdaq itself, because a lot of it's based around the performance of Apple. That's another problem with the Nasdaq.
Well, how much is Apple? I mean, what are the? Let me just pull up Apple and see how Apple's doing right now. He's saying Apple is overvalued.
Well,
I guess because Apple's.
Let me just pull that up here.
The PE ratio for Apple is 17.35. It's really not that high. Their earnings per share is 7.44. Their yield is 1.46%.
Yeah.
So I mean, a PE of 17, that's overvalued. I mean, 15 is a normal PE. So I mean, they're overvalued maybe, but not by much.
Right.
I don't think that's above it. I mean, so I don't know what stocks he thinks is really overvalued. Maybe he sees some other stocks in the Nasdaq that are crazy. Let's look at Google.
Let me just look up the PE ratio in high-tech firms as an industry.
I'm not getting it. Thinkorswim doesn't even have a PE on Google. I don't know why. That's really weird. What about Amazon?
I got Quora here. Anybody else want to chime in? Don't be shy. This is an open forum.
Well, Amazon might be a bubble, according to Thinkorswim. They're trading at 385. Their PE is minus 741.
Okay.
That seems like that's a bubble.
Yeah, but we're talking on an index level, or even on the exchange itself.
I mean, well, the Nasdaq is basically coming back to its all-time high of March 2000, right? Where it was over 5,000. So, I mean, this is the Nasdaq's at a level where last time it crashed.
Yeah, I mean, that's what I think he's also referring to. Like Bill Gross is saying that no different than when he predicted the housing was that it was in a bubble formation, and then it popped. What was it? September? No, September 2008.
The problem with valuations and bubbles is that the environment is so different now in 2015 from 15 years ago in 2000, because you have high frequency trading is much more ubiquitous now than it was back then. In 2000, you didn't really have high frequency trading. Now, every major firm's doing it, and so it's like a different world. When you have algorithmic traders, right? They trade in low volatility environments. They just keep buying stocks. Plus, you have people investing in their 401ks and IRAs, just purchasing stocks no matter what they cost. Even if they're overvalued, because they're just investing in their retirement, in their dollar cost averaging. So,
Yeah.
It's a combination of algorithmic high frequency traders and the fact of 401ks that are pushing the market.
But do you think a lot of it is artificial?
Yeah, I think it's all artificial. I think high frequency trading is artificial, and I think the tax benefits the government gives to invest in 401ks is also an artificial thing, where the government is skewing the market. In other words, one of the reasons the government does that, they give you a tax break, is they want you to put more money in the market, because when the market goes up, it's better for them politically.
Yeah.
So their political careers if you invest in your 401k, right?
Well,
It's all artificial.
Well, we got a guru local to me, Greg. How you doing, Greg? We're just
good. Sorry that I'm late.
Oh no, don't worry, dude. We were just talking about Nasdaq today and how it's hitting the peak of its 5,000 plus. I don't know if you saw this article or an interview from Bill Gross. He was saying that the 5K represents a bit of a bubble. What's your take on it?
Well, some people said when it was 3,000 there's a bubble, and 4,000, 5,000, 6,000. I think it's overbought, but I don't think it's a bubble.
What are your technicals indicating? You think that there's going to be some kind of correction on the way?
Well, it's hard to say. I'm more of looking on the technical analysis and also the fundamentals. And unfortunately, for a very long time, the markets were in the same situation. It's hard to believe this run actually started in 2009 and continues, 6 years. And every year through that period of time, you could say it was overbought or bubble. So I personally more of a practical guy. I look at what actually happening in the markets, and so far it is up trend. And I learned in 20 years of my experience, I never argue with the market. So as long as it's going up, I just join the party.
So, but you don't do any sort of like risk assessment, like looking at it from a forecasting point of view to sort of say, yo, like we might have to pare back here.
Yeah, I do actually. Risk assessment is an essential part of my trading, and in fact, I never enter any trade before I have a plan, meaning that I need to do the analysis. I need to know at what price I would enter, and also have my stop losses, etc.
Yeah.
So right now I'm much more careful and reluctant to enter new positions because of that fact that it is 5,000, and because so many people believe sometimes it could happen that there will be correction. But saying that this is the big drop that everyone expecting, I'm not sure about that.
Yeah.
It could be, it could not be. So I'm not in the camp that saying this is the big drop in the market. It could be a correction. Actually, it's overdue for correction.
But what would you put as a number on a correction, like 10, 20%? Or 5%?
I did not look. I could take a look at Nasdaq. Let me just take a look at my charts for a second. But yeah, I think 5 to 10%, that would be normal. There is nothing to worry about because it's way overdue to correct about 5 to 10%. So I would not make a big deal of that.
Yeah. Anybody else have any opinion on it? If anyone wants to type up or voice an opinion?
We've just had a mini correction of about 5% in the S&P 500 and a bit of volatility for about 2.5 months.
Yeah.
So, I think for the next 2 months or so, I think we'll be in a low volatility environment, and after that, all bets are off.
Interesting. Well, here's another one from an economic point of view: the impact of the rising U.S. dollar and what Bill Gross started a few months ago talking about currency wars. Wouldn't that be enough to be a catalyst to sort of spook the market?
What do you mean by currency wars? The dollar index has been going up because Europe has been having lots of problems, and the euro is.
Yeah, but they always refer to Japan as a reference point where they're trying to. A lot of the emerging markets, especially China, Indonesia, Philippines, and whatever other heavy economies where there's a lot of manufacturing on a global level, they'll have to lower their export or their local exchange rate to drop the price of their exports so that that can get their economies going. So as a result, the U.S. dollar goes up because of that, because it becomes the safe haven. So especially China's doing it, Japan's doing it, all of Europe's doing it, where they're dropping their currency on purpose so that they can get their exports up and get their economies going. So as a result, the U.S. dollar is negatively impacted by it.
Yeah, I mean, that's quantitative easing, and we've done a lot of it. The U.S. has done a lot of it in the past, and now they're starting to pare that back, and now other parts of the world are doing it more. So, yeah, in that respect, I guess you could say it's a currency war.
Yeah, but the problem is if you have a higher U.S. dollar, no one's going to be buying U.S. product on an export level. So,
yeah, I mean, yeah, that's true. But the PE ratio. I mean, firms are selling because earnings are good. I mean, you look at the PE ratios. I just looked at the PE ratios of several ETFs, which represent indexes. So the Russell has a PE of 19, according to Yahoo, if Yahoo Finance is correct at all. And the SPY is at 17, and the PIA, which is the Dow ETF, is at 16. So, I mean, earnings are up, so firms are selling, right?
Oh, I guess if
they're good.
I guess if that's more of a healthy domestic market, but in terms of an export, I think a lot of countries will turn to other countries to buy product outside the U.S. Anybody else?
Yeah, I don't know what the breakdown is: domestic sales versus international sales. That would be
well, I know for Germany, it's a big concern for them because over 50% of their exports are, or their whole GDP, 50% of it's all export.
They're not a consumer-based society. You know, the countries that got decimated after World War II, they learned to save. So, like the Japanese, they're not consumer-based, right? They're export-based.
Yeah.
Because you know, they're preparing for another war. It's in their psychology, you know, to feel that lack. And America's never experienced, you know, getting bombed into the Stone Age. So we have a consumer-driven consumption type of economy.
Anybody else have an opinion on the U.S. dollar and the rising U.S. dollar versus the other international foreign currency that's dropping? It's basically being manipulated by other governments. Well, anybody has a take on it? We're just talking about this right here. Impact of rising. Go ahead, Greg.
I tend to agree with you, Brian. This is actually one of the big issues that the U.S. dollar is going up, but I think it's a little bit more complicated than what we just discussed. There are many factors. Let me start just with the comment about the PE ratio. That's true that the PE ratio for most indexes and individual stocks are in the middle of the range that, I mean, the historical range. But the question is, what's happening in real life? In real life, the economies in all the countries are not doing too well. I think, you know, Europe, obviously, it's almost in recession. Canada probably will get there if the oil remain at the prices that are today. And U.S. economy is doing so-so, but on the other hand, the U.S. markets actually is at all-time high. We just discussed the first item in your agenda, the record high of Nasdaq and other indexes. So as you can see, there's a huge disconnect between economy and the stock market. And so the question is why that happening? And I think the important part that we're missing here in the analysis, why the PE ratio is in this range, it's not because the company is doing much better, it's because there is a lot of cash in balance sheets of most companies, and most companies are using this cash to buy back their stock. So for that reason, the PE ratio is way down, but this is not a good indicator of the health of the economy nor the health of the companies. So
yeah, I agree.
Buying back stocks and keeping the PE ratio in this range is not sustainable. So at some point of time, that will end, and then we'll see how the real economy is doing.
Well,
I have a question.
Go ahead.
Buying back stock, wouldn't that make the PE ratio go up, not down?
It's very simple. Maybe I could explain by example. So let's say there's a company A that makes, let's say, $1 earnings, right?
Right.
So what PE? Okay, let me just take one step back. PE is the price divided by EPS, which is the earnings per share, right? So let's say that everything else remain the same, not changing. And so I had a million shares, and I have only 700,000 shares. So I take the same earnings and divide by less shares. That means the earning per share going up, right? If EPS going up, then PE ratio is going down, right?
Well, but those shares still exist. They just belong to the company who issued them, right? They're still.
No, they're buying back. They are off the market, so they are not. They do not exist. If the company buys back shares, these shares are gone, basically. The company can issue new shares later on, but when the company buys back shares, these shares are not available.
All right, so it's kind of basically like a bookkeeping kind of thing. I understand what you're saying.
Yeah, you're right. It's more of creative accounting or whatever it is, but that's what most companies are doing today. And this is actually the consequence of QE programs, because right now, effectively, there is a zero interest in the market. And actually in Europe, I just had a discussion this morning with some people from Europe. I think it was in Denmark that they mentioned one of these Scandinavian countries. There is a negative interest in banks. So you go to the bank and you want to deposit your money, you have to pay interest for that, and vice versa. So in this environment, for individual and companies, it would be worthwhile to borrow money and invest in something else. So, for example, big companies like Microsoft, they have billions of dollars in their balance sheet, but they did go to the market, borrowed money at 0.1% or whatever, and bought back their shares. That's the rationale. That's what they're doing. Not to, they don't do necessarily to manipulate the earnings or PE, but they are doing because it makes economic sense for the companies.
Sorry, who's?
Yeah,
Go ahead. Oh, so you want to voice opinion in there? No, I guess not. Continue, Greg. Sorry, man.
Yeah, I thought somebody had something to say.
Yeah, same here.
That's one of the reasons that the earnings per share going up is because companies buying back shares, and this is because the interest rates so low that it makes sense for companies to do that. Now, how long that could be around, I'm not sure, but that's what's happening now. Another reason for US dollar to go up is if you think around the world, the best return to your money would be in US companies. So people from all the world, from Europe, Japan, and you name it, they buy American companies, American stocks, and to buy the stocks they have to buy US dollars. So these are few reasons that the US dollar go up. But I also trading the forex exchange and these pairs of US and Canadian dollar. And recently, the U.S. Canadian dollar is kind of trading in the range, meaning that Canadian dollar stopped dropping. Again, I don't know where it's going, but nothing in investing going up forever, nothing going down. So at some point of time, things would have to get back to normal, I guess. I don't know if that makes sense to you guys.
Yeah, it does. Well, the other thing is, obviously, a lot of the pension fund guys are chasing yield. The only yield they have right now is in the U.S. Markets.
That's right.
That's another reason why it's going up, Shalom, I think. I'm just taking a look at the U.S. Treasury. It's spiked up quite a bit earlier today, so they're definitely keeping their eye on yield. And you know, the markets is one of them right now. If it performs well, if not, it just switches over to the U.S. Treasury. Here's an example on CNBC. So you can see it just spiking up right here. Just in the last, when there's uncertainty, it just spikes up. Anybody else have any opinions on it? We just got some new people joining us. So we're just talking about U.S. dollar, the rising impact of it, currency wars. Anybody else have any opinions on these topics? If anyone wants to type anything in or just chime in, everyone's all welcome here.
I didn't know that Puerto Rico was in trouble.
Yeah, they are. Why don't we just stick to the plan here? Why don't we talk about what Warren Buffett put out on his annual letter? Anybody
I didn't read his letter, so I don't know anything about that.
Yeah, that's a big one. Anybody have any takeaways from that, or anybody read it or heard about it? Have you heard anything about it, Greg?
No, actually, I didn't have time today. I just know before the meeting he bought quite a few IBM stocks.
Yeah.
IBM actually came down big time, and so Warren Buffett bought a significant amount. I don't remember how many shares.
Yeah, I was just...
I actually looked recently at IBM. It is actually in downtrend, but again, it's kind of bottoming out. And if Warren Buffett bought them, it's worthwhile to take a look at IBM.
Well, I was just checking this on the Apple figure of the EPS. It's 7.39, but when I checked IBM, this blew my mind. It's a 13.48, so it's almost double the EPS. Or sorry, 11.9. So there's a lot of confidence going into IBM versus Apple. So maybe that's what Warren Buffett's seeing.
Yeah, and it shows on your screen IBM pays almost 3% dividend, which many people like that. But if you look at the chart of IBM, it's horrible.
Yeah.
Look at the longer term, like
I'm doing a 3 month. See, it's bounced back quite a bit since January.
Yeah, that's why actually I looked at, and that's probably why Warren Buffett bought, because it's kind of stopped going down and it's bouncing back.
Yeah. I mean, there's a comment here about some disagreement with Buffett buying it. Quite interesting. But anybody else catch what his letter was saying? The interesting I took away was Charlie Munger. I posted some stuff about Charles Munger and the partnership between the two of them, and who their next CEO will be for Berkshire. And they got some pretty interesting guys. One guy, I can't remember his name, he's from India, who's running the insurance side, and that's pretty well the healthy side of Berkshire. So that might be the next guy from the executive level. Anybody else have any opinion on Warren Buffett and his outlook for Berkshire Hathaway? Guess not, eh? Let's move on to the next topic. Okay, so you were talking Puerto Rico, Shalom?
Yeah, I didn't know that they were in trouble.
Yeah, they're on borderline. Let me just try to pull up some news here. Yeah, some of they're possibly on a brink of defaulting here.
Is this a recent occurrence? Or?
No, it's been happening for the last couple of months. Let me just find if I can find any news on Puerto Rico. These are the sort of things I'm looking for. Anything that's a catalyst in the market, and this is a potential one. I find if Puerto Rico does default, just looking for anything, any kind of headlines here. If you go to Bloomberg, here's an article on it. They're talking about.
I got a paper on it, so I'm going to share.
Yeah. Oh, Serge, I missed a couple of topic questions here. Sorry, Serge. Okay, so let's go for a little further back. How will rising unemployment affect deflation? That's a good question, Lars. Anybody got a question. Want to take that, Greg?
I'm sorry, I'm not sure what the question is.
Lars was asking, how will rising unemployment affect deflation? What's your opinion? I wouldn't even know where to go on that. I mean,
Well, unemployment's been going down, not up, at least in the U.S. But
I'm not sure if he's referring to Europe.
Look, if unemployment goes down, that's inflationary, right? If it goes up, at least we know it's not inflationary. I don't know. I wouldn't say it's deflationary, but it's not inflationary.
Well, let's say if we define a stagflation instead of deflation, but you still have unemployment going up, what then?
Stagflation is where unemployment and inflation go up together, right? That's stagflation?
Yeah, okay, you're right. Yeah, I take that back.
Yeah. Stagflation. I mean, stagflation we haven't seen since like the 70s, right?
Yeah,
So it's been a long time since we've seen that.
yeah.
I hope we don't see it again. The 70s were not good years.
No, I know.
70s, right?
I don't think we'll see those kind of inflationary figures for quite a while.
I remember in the 80s when they jacked up interest rates. When I opened my first bank account, I got 12%.
Yeah, I remember that.
In a regular bank account.
Yeah.
It's great for savers. I mean, if you have a lot of cash, it's great. You don't have to invest. You just put your money in the bank.
Well, go on.
Yeah, probably.
Go ahead, Greg. Sorry.
No, just kidding. Probably at that time I paid 18% for my mortgage when you got paid 12% from the bank.
Right.
Yeah.
If you're a borrower, you get killed. If you're sick,
yeah.
you make a fortune. Yeah.
But in general terms about the question of unemployment, it's fairly simple. If unemployment rises, that means there is less pressure to increase salaries or hourly rates, and that would create more deflationary pressure. So the prices would not rise if unemployment rises and vice versa. So I'm not sure if that was the question, but recently unemployment in North America is fairly stable. In Europe, it's a horrible situation.
Yeah.
There is, I don't know the exact figures, but in general terms, there is more than 10% above, and for young people, it rises up to 25, 30, 40, 50% in some of the countries in Europe.
Yeah.
That's definitely something that is not sustainable, and that's one of the reasons that Europe in much bigger troubles, and there is a real deflation in Europe because of that situation. So there is no question if unemployment is high, inflation would be low.
I guess.
I'm not sure, was that the question?
Well, the question we got here is from Lars: how will rising unemployment affect deflation? I think that would pretty well answer it.
Yeah.
But back to Puerto Rico, Serge was saying, didn't hedge fund buy their debt? I'm just looking at this article, and they have $70 billion worth of debt. And I know you said, Serge, they cannot declare bankruptcy, so they are not a U.S. state. Anybody have any opinions on Puerto Rico? They're not in a pretty state right now, that's for sure. You said, Shalom, that you pulled up a paper?
I sent it to you guys. I put it there.
Yeah, I got that. And did you get anything out of that?
Well, I'm going through it and some other papers as well. I'd have to look through this in detail. But Puerto Rico's small, right? So whatever, it's not Greece, right? So the impact is going to be minor compared to a Greece.
Wouldn't you agree, though, that would be the sort of thing that would spook the market? That would, I really think that everything that we've talked about is like a house of cards. It's just going to take one catalyst that will it'll just take down the whole deck of cards.
Right, but it would have to be big. Like Lehman Brothers was big, right? Puerto Rico, what's their GDP? Let's take a look. Maybe they are big. Let's see. GDP.
Yeah.
127 billion.
That's big.
120.
That's half of
Yeah.
Greece.
That's kind of big. That's kind of big. Yeah.
Yeah, that's half of Greece.
They're 72nd ranked in GDP.
Worldwide.
Let's look at where Greece. I'm looking where Greece is ranked right now.
I think they're-
Greece is much better. Greece is 51 at 278.
Yeah, so that's what I thought. They're close to half.
Yeah, so that's interesting. Yeah, close to half. I don't know. I mean, Puerto Rico isn't really part of the United States, right?
Well, yeah, but
It's
when
a state. It's not part of the United States. It's not a state. So I don't know. You know, I don't know who lent them money. It really would depend who the lenders are, and the lenders are probably all U.S. banks, right? I would think,
well,
more or less.
I got here. A Congress needs to help out, so that there's a legal binding with Congress that they do need to help out Puerto Rico.
Oh yeah.
Yeah. Got some more comments
Yeah,
here.
so there'll probably be some kind of bailout then, I would think.
Yeah.
It says here, President Obama would have to raise taxes by $378 billion in 1 year's time to match what Puerto Rico has accomplished. The two largest, well, taxes going up, that would not be good.
Yeah.
No, probably what they'll do is just print more money. Borrow more. Debt.
What's the U.S.
Why not? We're already about like 17, 18 trillion in debt already. What's a few more trillion?
It's when you start getting into where Greece is at, where what is it? 75% of their debt is up against their GDP, and what's
We're
the?
at 100%.
Is it 100%?
Yeah, we're at 100%, or more than 100% already.
Yeah, I think it's much more than 100%.
Jesus.
No. I think the GDP of the United States is like 16 trillion. So we surpassed it. Like we're at 16 or 17 trillion now. But Japan is more than double. They're at like 212% debt compared to GDP. So they're like more than double.
Wow.
Yeah, Japan's going to be in trouble.
They've been in trouble for over 20, maybe 30 years.
Right, but it hasn't all hit the fan yet.
You think, eh?
When it hits the fan, there's going to be a lot of its weight.
Yeah.
That's a big one.
Looks like Lars came back with a comment. When Europe start doing massive quantitative easing in times of massive unemployment, isn't that the same as asking for a massive case of stagflation? Stagflation would be more deflationary, as we indicated, because they're in deflation, right? Homeowners will be hit hard. We know that already. A lot of their property values are pretty well worthless. Anybody want to chime in on that one? Because I know I got a friend who's trying to unload his property in Barcelona, and his problem is that they keep raising his property tax, so the property's pretty well useless or worthless.
I mean, with all the money printing, it's hard to see any scenario where this doesn't end with massive stagflation. No jobs and inflation, hyperinflation exploding. Yeah, that's not a pretty scenario.
No, no.
So find your own little island somewhere to hide out in.
We're looking.
Yeah.
Well, this brings us back to Europe, I guess. We talked about it already, but stagflation or deflation for Europe over the long run? What do you guys think? Deflation?
For Europe?
Yeah.
No, I think deflation is only temporary because there's a way out of it. You just print more money. It's inflation. It's hyperinflation, which is the final scenario. So first there's deflation, and then there's inflation, and then hyperinflation. So the final scenario is destruction of money. So when there's hyperinflation, to a certain extent, the money, the currency is destroyed, and then it deflates to zero, and it's all gone. And then they go to a new monetary regime. That's the whole cycle.
Didn't
Deflation. Go ahead.
Didn't Argentina kind of go through that? Never recovered?
I don't know what stage they're in. Are they in inflation or deflation now?
Well, they went through a hyperinflation mode many years ago.
Okay.
And
So did they switch? Was their currency destroyed? Then they probably went to a new currency, right?
no, there was no new currency. It just became worthless.
How did
And
they get out of it? It's worthless. How did they get out of it?
well, let me just look up at the history here.
Like Israel, when Israel had hyperinflation, they went to the new shekel. There was the shekel, and then that went to like basically zero because of hyperinflation. So they created a new currency.
Yeah.
I think Russia kind of did that too. I think all countries that's what they do. Either they devalue, they have to do something, right? So
Yeah, I just found it looks like there's this one on Argentina. Argentina approach inflation, ditch the peso, hoard the U.S. dollars. So that's that's just a few months ago. So maybe it's something similar to what you're saying, but as you're saying, Shalom, it's just the problem is they will ditch their local currency, but they have to find a safe haven somewhere. But the question is, what
they
happens?
usually create a new currency. Usually they have a new currency that's backed by silver or gold or something.
Yeah,
After
yeah.
the fiat currency is completely destroyed, they issue a new currency that's backed by something real. And
Because
anyways, and then the cycle goes. Then they wind up depegging it. As things get better, they depeg it, and then they print more, and then they deflate, they hyperinflate, and it's the same thing all over again. You know, and currencies are destroyed, and they go on to something. It's the whole thing. It's Ponzi scheme on top of Ponzi scheme until it's destroyed, and then they come up with a new scheme.
yeah,
You know, it's until we move to a completely different regime. It's honest.
because Serge came back with. Has anyone heard of Amero, similar to the euro, but it's to replace the currency of Canada, U.S., and Mexico? Yeah, I know about the Amero, but it's never taken hold. I think it's just more talked about. Anybody else know of the Amero?
The Amero.
Yeah.
That was an older U.S. currency.
No, that was something that they were looking at to. I mean, from my understanding, it's more conspiracy theorists that go on about it, but
Were they going to merge the dollar with the peso?
and the Canadian dollar, yeah, it's all one currency.
Make it an Amero?
Yeah.
I don't think that would be a good idea at all.
No.
Given the state of Mexico today.
Well, actually, the Mexican markets right now is the number one stock market with the best performance.
But that's just recently. I mean, they have a lot of structural problems there.
No, they're cleaning it up.
Did they clean up the drug?
Yeah, well, they just arrested the one big guy last week.
Yeah.
So they're making some good progress there. Serge also said, I can understand the U.S. and 3 U.S. Federal Reserves as the first 2 went bankrupt. And then you got spot on from Serge. Shalom? Yes, long-term goal.
Thanks, Serge. I think, yeah, I mean, it's basically it's just, it's just history. The thing is that now that the U.S. currency and the treasury market is so big and so deep, that once it goes under, I mean, it's going to be such a wake. I don't see there's going to be such turmoil. It's going to really be crazy as we try to go to something new.
Yeah, well, here's the
IMF issued currency.
Well, actually, let me pull up an article on that because I've got. I don't know if you guys know James Pritchard. He's quite good at predicting the long-term outcome. Let me just pull him up on my blog. I gotta find his video. It's about an hour and a half video. It's quite good. Hang on here. Anybody else want to say anything? I think I got his name wrong. Let me just think. His name's James Pritchard, I think. Pritchard. No, I can't find his name. I can't help you there. But there's a guy out there he's fairly on Bloomberg quite a bit. He's quite good. Anyways, anybody else have any opinions on? Go ahead, Sean.
No, we discussed theory a lot. Does anyone have any good trade ideas they'd like to share? As far
Um,
as what asset to trade at what price?
yeah. Anybody have any good trading ideas or trading strategies they like to share? I don't think you'll find a lot of that, Shalom. A lot of people like to keep it as intellectual.
Okay, I'll share. I'll be the first. I'll share one since I brought it up. So if you look at the VIX future curves, the VIX Central,
Hang on here.
you see the skew. The skew is really elevated compared to VIX spot,
Yeah.
and the market, the realized volatility is in the toilet. Go to VIXCentral.com.
VIX Central. Okay.
So I think that being short the VIX is a no-brainer. You just have to do it in a hedged way. You know, you don't want to, just in case the VIX decides to explode because the market suddenly took a plunge. But it really looks like the VIX futures are still pricing in like a much more volatility than the realized volatility of the underlying is showing, or that VIX spot movement has been showing. So, it looks like VIX options are really overpriced. So to buy a VIX put future option, or sell a VIX call spread seems like a strategy that can have a payoff in the next several weeks. You just want to be hedged. You want to limit your downside by either buying premium or selling verticals. So hedging your short position so that you don't, if anything happens and it turns out that I'm wrong, you don't get killed. But it seems like a no-brainer. You see what I'm talking about, Brian?
Yeah. Yeah. I
Look at
do.
that. Look at spot is 1304. There's about 2 weeks left, 3 weeks left. 2 weeks left to go to VIX expiration. It expires the Tuesday of expiration week,
Yeah.
and it's much higher. Normally, it's not this elevated. So I think eventually this entire curve that you see here is going to move down. It's going to take a shift down, and then VIX puts will be worth much more money than they're selling for today. So those are the type of trades that I'm looking at now.
Anybody got?
Anyways, I shared my.
What? Anybody have an opinion on it, or like to chime in, or add anything to that?
Well, I think there is a good reason why this curve in this shape. What that means that traders believe volatility will go up, and I think we live in such a situation that we discussed from the beginning of this meeting that if anything happens in the market, the VIX would spike. There were times not long ago, a few months ago, it went to 20 something. So it doesn't take much for VIX to spike to double from these levels. So having it short, I think it's a very risky proposition.
Well, I mean, if you look at the market recently, there's been a lot of volatility for the past 2.5 months. I mean, just from my experience, when the market moves sideways with a lot of volatility for a long period of time, that's usually instead of a serious correction, which we didn't have. We had about a 5% move down in the SPX, and then sideways movement. So from my experience, I think that there's limited risk for a spike up at this point. But I mean, it definitely could happen, and that's why you have to hedge all your positions. Definitely.
I definitely would hedge it because we can wake up tomorrow morning, something happened, and the VIX will go to 1340.
It could go to 100. Who knows what's going to happen, right?
Right.
We
So.
don't know. But what we have to do is play with the probabilities and where the statistical edge is now. And right
Right,
now,
and have some risk control measures.
absolutely, always. But right now, I'm just saying the statistical edge is that VIX futures will come down to meet the spot level. I mean, it's way above spot. It's trading at a huge premium above spot. And there's nothing to really justify that except that the market has been very volatile for the past 2.5 months. That's basically it, and the whole thing with Greece and all the problems that have, been going around in Europe. But besides that, there's really no justification for such a premium in VIX futures. So realized volatility doesn't justify it. The spot doesn't justify it. And the fact that volatility is kind of played out for so long, and now it's dropped. Usually what this indicates is we're in for a low volatility regime for at least a couple of months, unless something really traumatic happens, like something in Europe or Ukraine. But barring World War III, you know, or default of a major nation, you know, this is a no-brainer. You always have to trade with the statistical edge. So, anyways, I'll get off my soapbox now.
No, it's cool, man. Don't worry. If anyone else wants to add anything, please do.
I think this is one of the best trades I've seen out there.
Well, basically these days we see tons of VIX options being bought on the high end, 30, 32, 35.
Right.
So does it imply anything?
But with any type of volume, I mean, they're being bought with high volume.
Big time.
I'm going to look at that right now. So which month did you say that was for? How far out? What was the duration?
I think March and June. There was March and June. No, but yesterday there were 130,000 in terms of premiums.
At what strike price?
30 and above.
30 and above.
And today,
I see there's open interest 120,000 for the March expiration at 30.
30, 35 and above.
30 at 32.5, 88,000. Yeah. You know, but look at how cheap they probably bought it at a very low price. I mean, they probably paid like 5 cents a call, which is really the lowest that you can buy it for, generally. So I mean, they bought a lot, but they didn't spend that much money because they're so cheap. So I think this is just like a speculative bet, you know, because recent volatility's been high. You know, it's just like a lottery ticket.
Okay, I see, that's your interpretation. That could be the case. But today, I believe that the 14, 15 level, there a lot of puts was sold.
A lot of puts were sold at the 14 level?
Yeah. $40 or March or April, I forgot which one.
Yeah, the open interest is 89,000. I mean, yeah, they've sold. Well, I mean, it's open interest. I don't know. Let me take a look at this.
Well, if that's the case, it means 15-ish is the floor people are seeing in March.
You know, the open interest just means how many contracts were open, but
yeah,
it could have been closed as well. Total volume.
Just in the meantime, I put the guy's name his name's James Rickards Project. I just put in, if you want to watch a really good interview with him, just go to the Prickardsproject.com. There's a good video on there, about an hour and a half. I put it in the chat box. Sorry, Shalom, go ahead.
No, I'm looking at the June contract for the VIX at 30, 74,000 contracts, open interest. That's a lot. And those contracts are not so cheap. They're between 70 and 80 cents, about 75 cents a contract. So $75 a contract times 74,000. So there's a bit of money there. But you know what? June is more than 2 months out. You know, so you know, people are thinking that, you know, there'll be another problem. The other shoe will drop for Greece or Europe. So that's the bet over there. Besides, I think a lot of these trades are spread trades, so they're kind of hedging this stuff. They're not really going out, you know, just with a speculative one-sided bet. So, you know, we'd have to see the actual trade and what they've actually done. It's not necessarily, it doesn't necessarily mean that, you know, something is going to happen. There was one video by that guy, Nigerian, what's his first name? Not Peter, his brother, but then John Nigerian. Who, one time he said, like a few years ago, there was a hedge fund that bought millions of dollars worth of Bitcoin. And then basically a week later, the market just collapsed and VIX went through the roof. But, you know, I don't know how he got access to that information. But if you had access to hedge funds that started to buy millions of dollars of VIX calls all of a sudden, that would definitely be a red flag, because the hedge funds generally know more than anyone else as far as what's going on, even more than banks. So if you can get that information, that could be a good indicator.
I'm just trying to reduce the background noise, trying to guess who it is.
It's not me.
Oh, I know. Might.
Just being curious, given the spread between spot and the curve is so steep, so what kind of a trade can be made?
Well, for me, you can. There's two things that I do, or that I would do, is buy VIX puts, or buy or sell VIX call spread, vertical spread. So in other words, you set a VIX, you'd sell a VIX call, but then you'd hedge it by buying a call at a higher strike price, right? So you'd like sell the VIX 17 call, and then you buy the 20, right? And then what you could do is you could put a limit order in there, because you probably don't want to risk the full amount that you could lose, because it's going to be like a 5-to-1 loss, right? So if there's a tick up, if there's a serious tick up in volatility, you'd get out at your stop, which generally I wouldn't. If the amount of money you lost on the spread is the amount that you make on the spread, if you buy the spread, if you sell the spread for $35, and the spread doubles to 70, I get out at 70. In other words, that would be the maximum loss I would take before I get out of it. Because you could lose 300 minus the 35, so you could lose up to $265, right? So you wouldn't want to lose that, while you could only make 35 on the upside. So you have to manage that. So I mean, obviously, the time to do this was when volatility was much higher. It would have been much more profitable. But still, it can be very profitable now. You just have to manage your money correctly. And so if you have a $10,000 account, you don't risk more than 2% on any one trade. So you wouldn't, if you get into a position, the maximum you would spend would be $200.
Serge has put a pretty interesting book in there. Thanks, Serge. Put a little comment in there. Better book than Rickard. Yeah, I kind of figured he may be a bit of a sketchy kind of character, but he is always on Bloomberg, so.
The methodology of money.
Yeah.
I don't think money is a myth. I mean, money is a real thing. It's psychological momentum. That's what money is. It's energy, but it's based on psychology. It's what people believe.
Yeah.
But that's real. Beliefs are real things. So.
Are you able to put that link in? I'm just getting. Can't find the URL here. As you can see here.
I got the book. Unfortunately, Amazon doesn't let you look inside.
Oh, can you put the link in that you have?
I just clicked on the link from.
Yeah, I'm doing the same thing.
I'll put it in. I just clicked on the link here. Let me put it in again.
Oh, you know what? Might be my end, because I might not have access from Canada. Maybe. Oh, here we go. I got it. Thanks, Sean.
Sure, no problem. I'm gonna, I check it out on Google Books. Sometimes Google Books lets you look at books that you can't look at with Amazon.
Yeah. He says it goes back to Rome and how they depreciated the gold percent from 100 to less than 10% over a century. And look where Rome ended up. Thanks, though, Serge. Anybody else have any ideas on what we're talking about here on the VIX or volatility? Greg, you have any opinion, Greg?
Well, as I said, if you look at the chart of VIX, not long ago it was more than 20. It could spike back to 20. So I think that's why it's a risky proposition to get short.
That's why the VIX futures are elevated. Everyone's thinking that. They're thinking it's going to spike back.
Yeah, that's my opinion too.
Okay, well, if you're the same opinion that as the market does, then you don't want to trade. You only trade when your opinion is different than what the market is, because otherwise there's no upside.
No, I agree. That's why the market, what the market is, and everyone has different look at the markets.
Yeah.
Okay. I think the market is wrong. So it's the market, right?
I wish that you'll be right and make a lot of money.
Well, you just
Well, I do have a thought because right now, think about that. The lowest of the VIX point about 10.3, right?
yeah.
I think that's around April 7th. Now, the index equity all-time high, but we're staying at 13 point. So it means the market is a little bit more nervous than right now than 7 months ago. Isn't that a hint? That's what I'm thinking.
That's what I would think too.
There's a lot of nervousness in the market, judging by the IB out of the money SPX puts, how expensive those are, and the VIX futures. So there's a lot of people that are nervous.
Would you say nervous?
The only way
Go ahead,
the only
Shalom.
way you can make money. I'm sorry. Go ahead.
No, go ahead. Go ahead, Shalom.
The only way I found to make money in the market is to bet against the nervous people. All right.
Well, what I was going to ask is there a difference between clarity and nervousness? Because isn't that what the VIX is all about? Is that there's no clarity on a long-term basis?
There's no clarity on a long.
Well, there's no guidance. There's no.
We know the long-term behavior of the VIX. The VIX trades most of the time, right? 80 to 90% of the time, VIX trades at low levels. Doesn't trade at high levels, right? Most of the time, that's the way VIX will trade. Is low, below 20, right? Slightly below 15. That's just the behavior of the VIX.
Right.
And statistically, it's more likely for the VIX to trade low than for it to trade high. If you take a look at the statistics, how many days does the VIX trade above 20 versus it trading below 20?
Yeah, I can't argue that.
Most days it trades below 20, right? So where is the statistical edge?
I don't think you can get a statistical edge on it.
Okay.
Unless you can.
Fair enough. That's your opinion. Fair enough.
I'm just taking it from a common point of view. I don't know. I could be wrong. I mean, if anyone else has an opinion on it, anybody? Anybody have an opinion on it? Lars just brought up a point. Rise in oil price triggered that last period of stagflation in the 70s. What can rise in price to trigger the same inflationary domino effect? So it comes back to what I was saying, like what is the catalyst that will exactly do that, that will increase inflation over the next, 6 months, a year, or 5 years? Anybody? What do you think, Shalom?
What catalyst will produce stagflation?
Yeah, well, that will trigger inflation, basically. Long-term domino effect.
Inflation?
Yeah.
A bond market collapse, I would think, right? So the bond market, they can't sell treasuries, right? So yields have to go up, right?
Okay.
So I think it's going to happen in the bond market. When the bond market collapses, that's what's going to cause it.
Well, that's what they've also talked. The bond bubble.
Yeah.
Anybody believe in that? Is there a bond?
I do agree with Shalom. That's probably what's going to happen. It's not sustainable that the yield would remain so low. Another factor that could pull everything out is the commodity prices. Oil is low and all the commodities are at extreme low prices. Sooner or later these will go up, which will cause inflation. So combination of both, actually one can trigger the other. So if commodity prices go up, that could trigger the bond market and vice versa. So
But
I think there is a high risk of something happening in the near future. I think in 3-4 months, when the Greece problem will come to surface, which they give them extension of 4 months.
Yeah.
I think at that period of time, some significant changes will happen in the market, including rise in commodity prices and in yields.
But
I think the natural mode for the market is always inflation. There's always some inflation because the population of the world keeps getting bigger, right? And resources get scarcer as more people compete for the same number of resources, right?
Right.
It continually inflates everything. So there you go. So there's always at least a moderate amount of 2 or 3% inflation that you get. And if for something causes a rise in food prices or energy prices, typically it'll start with energy prices.
Here's a concept for you though, Shalom, is that they're actually predicting that the population is going to come down, or at least the growth of world population will slow down. That was just put up last week on Morningstar.
Right. So that's good news for inflation. That means that's something that will keep the natural rate of inflation under control.
Yeah, but it also has to be driven by manufacturing demand, and everything's pretty well collapsed on the manufacturing side, no? I mean, that's what brought down oil, no? So then, how...
Yeah.
I mean, unless the economies get better, where manufacturing, there's a demand, where commodity prices will start to go up, no?
Well, I mean, the economy in the U.S. has done pretty well. And so the economy collapsing, that must be overseas, like in Asia. There's probably, in China, there's probably less demand because they have less manufacturing to do. And that's what most manufacturing is done anyways, right?
Yeah.
So, yeah, they're having some problems.
The reason I thought is, is the dollar. The dollar index has been very strong. That will put inflation down. I think today's new high, probably 95.49.
Wouldn't you say that's a result of the problems in Europe? Because the euro's been so low because of all the problems Europe's had, so therefore the dollar index. I mean, the dollar index is 52% weighted on the euro, at least. I think it's around 52% euro. So as the euro goes down, the dollar index automatically goes up.
Well, anybody else have any opinion on that? Let me just see what the pair looks like.
There's an article in Bloomberg today about all central banks cutting interest rates. That make dollar index even more stronger. That will mute inflation for quite a long time.
Yeah, that's true. If foreign currencies aren't yielding that much in interest, then people will say, well, why be in a foreign currency? I could just be in the dollar, which doesn't yield anything anyway.
Yeah, but it could be, but recently, there's one explanation that because the dollar is strong and the bond is strong, I mean U.S. Treasury, that's how correlated. But recently we're seeing some divergence. I mean, the bond 30-year today dropped, and dollar go up, so that's something strange today.
Serge asked about population, about which countries are decreasing in population versus others. I know the Scandinavian countries, a lot of Northern European countries are having an aging population. Canada's another one as well. They call it super aging or something like that. Sorry to answer Serge's question. So has anybody checked the U.S. And Euro trading pair? What I'm seeing, it's almost on par. It's at 1-1-12, 1-1-8. Right here. That's pretty close.
I'm still checking the dollar index here. Hold on. I think the dollar index, it had a big move today, but you know what? It's basically at its high. The all-time high is not all time, but the recent high, the multi-year high is 95.85, and today it closed at 95.48, and it's gone up. It's gone up quite a bit, but I don't know why. Every once in a while, it makes that big jump.
Who knows?
I don't know. Who knows?
That's the problem.
That's right.
Well, we're down to the last question. Mixed data. How do you feel about the future of the U.S. economy over the long run? Up or down? What do you guys think? I feel like it's Jeopardy right now.
I think it's. I think it's going to be both. It's going to be volatile. I think for the next few years, it's going to be extremely volatile. I don't know how it goes down in a sustained way unless the U.S. dollar is not the reserve currency anymore. Then it might go down and stay down. Other than that, I think we can always kind of borrow our way out of trouble. I hope.
But like as Greg says, that's unsustainable.
Right, because at some point, if you borrow enough, people decide that it's not worth it to be in the dollar, even though the dollar is a reserve currency. It's worth it to trade in some other, using some other currency.
Right.
It's more stable. You know, that happens when enough people decide that the U.S. has borrowed enough and they're not willing to hold any more treasury. Right. I don't know when that will happen. There was a book out that said it will happen when our U.S. debt reaches 20 trillion, which we're pretty close to that. We're like a few years away from hitting 20 trillion. But that guy is probably just throwing out numbers. The guy wrote a book on. It's actually I forgot the name of the book. If I recall it, I'll definitely.
Well,
put it.
back to that James Pritchard guy. He said that the next it'll be a world currency. It'll be SDRs, special drawing rights, where if the currencies do get basically wiped out, the IMF will have to step in and liquefy with these new SDRs. So that's what I liked about his video. He was quite spot on with these sort of things. Just in case people don't know about that. Serge asked, that is why Saddam got Hussein, or Saddam got made 15% on his oil sale profits as he held euros instead of dollars. Yeah. I mean, what do you think the next big euro, let's say if the US dollar does get wiped out, what's the next currency that would be used as a, would it be British pounds, or what do you think?
No, I think like you said before, SDRs, IMF issued currency.
You think so? And that'd be a global?
Well, that will be it'll be the next global reserve currency after the dollar.
Yeah. Yeah. Anybody disagree with that? I mean, I don't know. For me, it's one of those uncertain futures I look at, and I think that's one of the reasons why things like volatility is just spiking quite a bit, or was. And Serge says the U.S. will just recreate a new currency. Yeah, Shalom already mentioned that, Serge.
Yeah, I mean, they probably because people in the U.S. citizens aren't going to trade SDRs. I don't think you wouldn't have like 5 SDRs to go get a cup of coffee in the morning. I don't think that would happen.
No,
the SDRs would be the reserve currency, and the United States would make some other currency, the new U.S. dollar, that would be backed by something, maybe backed by SDR, something like that.
What was the Swedish currency before their euro? Because they were in the similar situation back in the 90s.
Was it the krone?
No, I think that's Norway. No, sorry. Hang on, let me just see what.
I thought it was a Swedish krone.
It might be.
So the U.S. national debt is 18 trillion and change.
That's the U.S. debt, you said, right?
Yeah, right now, it's over 18 trillion. 18 trillion 141 billion 966 million. Wow.
When we're talking about currency wars, here's another story. This is for the Swedish economy. Sweden cuts rates below zero as global currency wars spread. That was just a few days ago, or about a month ago, close to a month ago. Krona, that's what Serge said, yeah. Bitcoin become the new global currency. I don't see that happening. It's just something similar, maybe. Yeah, the currency wars is real. Because I know, was it Denmark were trying to fight their currency and protect their economy with by keeping the euro, while Switzerland had to depeg their Swiss franc against the euro. I don't know if anyone's seen that story, but it's just this is pretty real. This currency war thing. Ghosts of the 1930s. Ouch. I can put that in the chat box if you want. Anybody else have any opinions on it? Will the U.S. go nationalist, where they close up their borders and only a few, and only buy their own products? I think that could happen. Trading wars, anybody? I don't think they promote that, Serge. That's what started the Depression in the 30s, or that's what exasperated it.
If there's a war, they might close their borders. If there's a big war.
Yeah. No, I think they want to keep the.
In doing it.
Sorry, go ahead, sir. Shul?
Oh, I say barring a war, I don't see the U.S. closing the trading borders.
No, I don't think that would ever happen. Anybody else have any opinions on the U.S. economy over the long run? But they get to tax themselves instead of losing profits from overseas. I don't know about that, Serge. When you look at Apple, they just recently announced that they're setting up all these new data centers in, I think it's Holland and Ireland. So I think it's just Apple's way of spending money that they have parked in Ireland. I don't know how many billions. They don't want to ship it back to the States because of the amount of taxes they'll end up paying. So they're just expanding their business outside the U.S. I think Google's doing that now with the regulations. I think Amazon's threatening to do it with their drones, with the regulations from the. Hey, Shalom, what's the? Is this not the FCC, but the dudes that oversee the space airspace in these states?
The airspace in the
U.S. Yeah, the FCC, no, FDIC. I'm losing track of it. FAA. There you go. Thank you, Greg. But that's probably what could also happen. Is a lot of the U.S. American companies will start taking a lot of their economic activity outside the states. Another thing that's not mentioned is the NSA. That's killing a lot of American tech business opportunities. I think China just said that they don't want any more American technology companies anywhere in their economy. So there's that. FTC, hang on, let Sergius comment on another thing. But they do get to tax. Okay, we might talk about that. FDIC, Apple does not want to pay repatriation tax. That's what I was just saying. Same with Microsoft, and all big companies will have tax benefits elsewhere. That's right. So countries versus companies. I think that's very true, Serge. What do you think, Shalom?
Countries versus companies.
Yeah, basically a lot of the American companies are going to say, there's too much regulation in the States. They'll start trading more outside the U.S. I mean, I think Apple's just starting. A lot of the tech are starting it.
But the countries retaliate. They'll say, okay, you want to move your company outside, then we'll tax your products. If you want to sell them in our country, then we'll tax you more. So, I don't know. It would depend on, where their markets are. If a company doesn't have a major market in the United States, and the United States starts putting all kinds of restrictions and regulations on them, then it would make sense for them to move somewhere else, move somewhere like Hong Kong. But if they have a big consumer base in the United States, then they may not just want to move out so quickly.
No, I'm not talking about head off. I'm just talking about just economic activity with these new. Like I said, that last week Apple announced that they were doing data centers in Ireland.
Right.
Let me just. This is a big investment here.
Well, I mean, there's another reason. It's not just economics; it's security. I mean, if you're a big company, you want to have data centers all over the world, in case something happens in one country.
Well, I think a big factor of it is just security with the NSA. They're losing edge because of it.
Yeah. But it makes sense to be globally distributed and to store your data on different continents. In case something happens.
Yeah. I'm just. Let's see. Gord said, "No, stalemate already exists. Companies are stuck needing to spend money in foreign development. I think it is, but we're taxed on the back end on monthly fees. Apple wants their piece of the cloud wars. I don't know. I think this is just the start of something. I mean, here in Canada, we had Burger King buy out our local Tim Hortons, and now they're domiciled in Canada now because of the lower tax. So these sort of trends, I think a lot of the American corporations need to may at some point start doing that, especially tech companies. Any opinion on it further? Or do you want to move on to another topic? Because I'm all done here. I've completed all my little questions here.
Yeah.
Anybody have any trading ideas? It looks like Shalom's looking for anything else as an idea that you guys use in your trading activity to profit, that consistently profits.
I could share some idea if you like.
Yeah, Greg, please.
Actually, there are some on my website. Do you want to open my website?
Yeah, what I could do you want me to? I could put you as organizer. You want me to do that? We could share your desktop.
That will help. Yeah, go ahead.
Okay, I'm going to make you presenter. Hang on. Just accept the pop-up. And I'm handing you the control of the desktop.
Actually, I'm not sure. I have a couple of screens. What do you see on the screen?
I see your investor support network.
Okay, that's great. So, as far as the ideas, you guys, I don't know if we have enough time, but
we have lots of time.
There are a few interesting things on the side you can take a look later. But on that tab, there are some investment ideas that I could share with you. So you can read through later on from the website. But one of the things that did work, and I believe it's a good idea to explore, is the cyber security issue. So I looked at that recently, a couple of months back, when they had this issue with hacking Sony Movies site. And I had some individual stocks prior to that. Recently, there is a new ETF which holds a basket of stocks in cybersecurity area. So these are the stocks that they hold. So in general terms, it's some interesting idea that we can discuss. Anything to do with cybersecurity, I think that's actually, unfortunately, the future war between countries. If you think about all the ISIS terror attack, and the Russians and the Americans are not better, that's the new battlefield between all these groups and countries. And I think as a result, governments and companies would spend more money on protecting their sites and infrastructure. So as far as the investing idea, I think that's probably something that you guys want to consider. So the actual ETF, the symbol is actually very interesting. It's a HACK, H-A-C-K, and it went up quite significantly recently. I would wait for pullback to get in, but you definitely want to consider this kind of thing. I'm not sure if you can see my screen.
Yeah, we can.
This is the chart of this ETF. So it went up from about $25 to $29 in the last month or so. So it's quite a significant rise. So that's the good side. And I always look at both sides. There is always risk involved in any investment that you do. in this particular case, I think the risk is, although it's a great idea for a long term, in short term, all companies in this space are way overvalued because everyone kind of jumped in and bought these stocks, so their valuations, their PE ratio, and all other metrics are fairly high. So it may correct a little bit, but I think it would be a good idea to buy these either ETFs or stocks when they pull back. So I'm not sure what you guys think, but I'm very kind of interested in this space of cybersecurity.
Yeah, I've heard about that on Bloomberg and Morningstar. Thanks for sharing that. Yeah, I've seen that quite a bit. Some of the more security companies that are placed to be because of, as you said, for the hacker wars. What do you think, Shalom?
Yeah, it definitely looks interesting. Of course, I'd like to see what the actual holdings of the ETF.
Oh, it's right here. You see this?
Yeah. Yeah, so I would take a look. I'm not familiar with these companies. I'd have to take a look at them. But if the companies are solid companies, then yes, wait for a pullback and then start getting in. The thing is, the question is how much of a pullback and what other market indicators and market conditions do you look for as an entry point? And then you need a target profit as well. So you need entry. You need three numbers. You need an entry price number, you need a stop loss number, and you need a profit point number. And when you have those three numbers, then you're ready to put on a trade.
Well, that's where your
That's right.
but that's where your system comes in, Shalom.
Yeah, absolutely.
But we'll expect you to put on a presentation next week, okay?
No pressure, right?
No. Oh, well, you better. I'm not asking you to do it for tomorrow.
Right. Okay.
Thanks for sharing that. Is there anything else you want to share, Greg? Well, we got you.
Well, there are quite a few more, so you guys may want to take a look. So I did have some ideas about low volatility. That's another point that you may want to consider. And I mentioned that back in July. And this is a very interesting observation, which actually worked very well for me and the members of our group. And the idea is when the markets are flat like they are now, or if there is a risk in the market, there are many studies shows that low volatility stocks are doing better than average market. And one of the examples that we use is ZLB, which is BMO low volatility ETF. So I just updated that back in not a week or so ago, and you can see the chart here, right?
Yep.
So what you look here, this candlestick chart, this is the ETF ZLB, which is low volatility, and this chart is going back to July last year. So since July last year, it is up about 20%. Now the blue line is actually XIU, which is the Canadian market, which is up just a few percentages, and the red line is the energy sector. So as you can see, the low volatility ETF performed better than the market and definitely better than energy stocks. So that's another idea that you may want to consider, especially if there are some opinions that the volatility would increase and some unexpected things could happen. And I know that Sean will ask what this ETF, what they're holding. I think I should have somewhere the holdings of. Let me just take a look at their website.
Yeah. Just so you know, we have a question from S. Sharma regarding your cybersecurity opinion, Greg.
Yeah.
And S. Sharma, we'll talk about Twitter in a minute. That'd be a good topic. How do you like that software, Greg? The TC2000.
Yeah, that's the software. I'm just trying to answer the questions.
Yeah,
This
yeah,
is
no
the-
problem, no
what you
problem.
look at the screen is the TC2000.
Okay.
Holdings.
So we're looking for
CLB. My Thinkorswim platform doesn't allow that ETF. It doesn't have a.
that's because it's Canadian.
Yeah. So maybe I can't trade it.
I'm sure you could.
Which one is that? Hack is American.
No, hack I can trade. The other one I can't.
The current one you're talking, Greg.
Yeah.
So on the screen, I guess there was a question about some companies that in this ETF. So these are the top holdings. The one that I'm quite familiar with is Palo Alto Network. Now, all of them, they don't have a low PE because these are the companies that are growing very fast, and usually at high growth companies, you do not have low PE. But as far as the companies, Palo Alto is probably one of the leaders right now. But all of the holdings in that ETFs are fairly good companies that you may want to consider. Obviously, you need to do your homework and take a look from your perspective whether you want to invest. But these are the examples of individual companies that you may want to consider.
Yeah. I should put up a disclaimer each time just to protect all our buns here. S. Sharma was asking about Twitter, using Twitter. I'll just read out his question. Said for small cap stock, tweets might be great future volume movers, especially from relatively target known investors. One WOH like to their positions or with. Anybody have any opinion on stock on Twitter as a place to get ideas from? I'm not a big fan of it, but anybody else having any idea? No? I'm going to say everyone's in agreement. Anybody use stock twits at all? Maybe. I'm sure you guys know about it, no? It's like the Twitter for the stock traders. And here, this one. Nobody uses this. You can just get, it's like a Twitter, and then you get dollar or whatever and then you get all the buzz on that stock. You just put in the dollar, whatever you want, and then there'll be lots of talk on it. It's the same idea if you go to Twitter as well.
I think the regular Twitter has enough followers and information, so I looked at that, but I found the regular Twitter would be good enough.
Yeah, but the problem is you don't know who to go with and what not to go with, you know what I mean?
Yeah, I agree with you.
And it's sort of like Bitcoin, you know? Who to trust and who not to trust. Hang on here, I'm going to load in my account. And here. Who has a Twitter account? Just give me a yay. I'm always curious to see if anyone's on Twitter. But if you just type in, I don't know, let's say Apple again, tons of chatter, lots of chatter. So again, for you, S. Sherm, I'm not sure what you can rely on. Oh, Gord, which screen are you referring to? Oh, I gotta take back the screen. Sorry guys, I didn't realize Greg's screen is still, you guys are seeing that. Is there anything else you want to show us, Greg?
Well, I'll just leave it up to you guys. You can take a look later. There are
Okay.
other ideas. But go ahead and take the screen.
Okay. Let me just show you some.
Unless people want to talk about other ideas.
Anybody else want to see some stuff from Greg at all on his site? He's got a really good site. He runs a local meetup here. He also, you're the Toronto chapter of IBD, right? Investors Business.
Yeah, that's correct. I'm the organizer.
So that's a pretty good paper, or I don't know, call it mag publication for just more retail traders. It's quite good. And I'll type it in. So anybody want to see some of Greg's stuff still? Otherwise, I'll take back Greg's. I'll be presenter again. I guess not. Okay, hang on, Greg. How do I've never done this before. Okay, could you guys see my screen again? Oh, geez, I just booted out Greg. Oh my God. Jesus. Sorry about that to Greg. Can you guys see my screen? Just give me a yes if you can see the screen. Not yet? Okay, hang on here. And here, I haven't done this before. No one could see my webcam. Interesting. I don't know how to show my screen here. Sorry, guys. I've never done this before. Make another attendee. Okay. Here we go. Can you guys see my screen now? Show my screen. You have been made presenter. Yes. Can you guys see my screen now? Can you see it? Just give me a yes. Yes. Okay. So let's go back to Twitter. I have to apologize to Greg there. That was pretty bad of me. By accident, of course. Okay, going back to Twitter. This is Twitter here on Apple. You just type in either the hashtag, and as I said, there's tons of chatter on Twitter. Also with StockTwits, the same idea, but you'll just get nothing but traders on StockTwits, StockTwits.com. Anybody else have any ideas, opinions, comments, or anything? Because we've been at it for quite a long time, an hour and a half. I didn't think we'd last this long, but I'll definitely do this again next week. I'm going to probably stay away from vendors, just do more just general trading. I think there's a better interest in that. You guys agree, or do you want to see more technology stuff? Just give me a yes if you want.
I agree. Trading is probably more attractive.
I appreciate that. I agree. Anybody else want to see more trading, less technology? I've been doing the technology for 5 years. It's driving me nuts. Anybody want to see more technology or just more trading? Just give me a... Gordon wants to see trading. Who else wants to see more trading, less technology? Just type it in. Trading. I think, yeah, I agree. Yeah, there's a smiley coming from Lars. I'll take that as trading. Anybody else have any ideas or opinions for this week? Shalom says trading. I appreciate that, Shalom. Anybody else?
You should have more confidence in our staying power.
Yeah. Oh, here comes Greg. You're going to hear me apologize. 1,000 apologies to Greg.
Yeah.
Thanks, Gord. Good session. I hope to make the next one better. Where's Greg? Greg, are you there?
Yeah, I don't know. I was disconnected. Sorry. I don't know.
No. It's my fault.
We spoke about currencies. If anyone would like a website that's got free streaming and historical tick data for FX, there's a site out there. I don't know if it's the most accurate site, but it's free data. If you guys are interested, I can send you.
Yes, put it in the chat box. But back to Greg. Sorry, Greg, I accidentally kicked you out.
Well, you know this one. It's TrueFX.
Yeah, I know that one. I'll give you an opinion in a minute in a sec. But sorry, Greg, I didn't mean to do that.
No problem, Brian. I just came back. It's okay.
I appreciate you coming back.
A widget that you can stick in your browser too.
Go ahead, Shalom, about TrueFX. I know about TrueFX.
There, I put it in.
Yeah, these guys. I don't know if they
It's a really handy thing to have up.
What's that?
When you're working. It's a handy thing to have up in your browser when you're working. You can just tab over to it and see what the currency pairs are doing.
Very true. Just in terms of archiving for data, there's a lot of gaps, and it's no different than Yahoo Finance data. It's good for historical testing and that sort of thing, but don't use it for beyond that. Don't put a lot of faith in it.
Yeah, for daily data, you're better off with Quandel.
Yes.
Quandel Free Data and Yahoo Finance.
Just so people know that they just added future options to their data for free. And they're adding on. What was that, Sean?
There's 1 minute FX and ETF data, historical data for free. It's the only place I know you get free historical 1 minute data.
And which one's this? TrueFX?
TheBonnetGang.com.
Why don't you type that up?
Yeah, let me find the link.
Yeah, Serge, I said Quandl. Yeah, you spelled it right. Quandl.com. Send a link. Quandl.com. Here, I'll bring it up. Pretty good place for historical data. I've been trying to get the CEO. He's local here in Toronto, Quandl. I'm trying to get them to do a.
I think you may have to register. It's free to register on the website.
Yeah, it is. Yeah, it's all free.
There you go.
The Bonna game.
1 minute data.
Let me just load up my end here. But for data, that's pretty good.
Yeah.
Anybody else have any comments or concerns at all? So we'll definitely do this next week. Do more trading. Everybody wants trading, so let's stick to that.
Absolutely. Trading ideas, trading strategies.
Yeah.
That'd be awesome.
Also, there's another local guy. Let me just bring him up. It's called. I don't know if people saw this. I just got this last night. There's one of the largest LinkedIn groups on LinkedIn. I'm just going to bring up the article here. I just got it this morning. It's an association for trading strategies. I'll give you the link here. Association. I'm just doing a search on my site. Hang on here. Okay. Yeah, here it is. It's called Algo Trading Association, just so people know. I checked the site. It's $40 a year if you want to be part of a huge group online. Here's the LinkedIn group. It's they just announced it yesterday, I think. This is the site. I'll put it in the chat box. It's $40 to join. And basically it's a group of something like 100,000 people that they get together and have events and talk about algorithm trading and blah, blah, blah. That's very cool. Just so everybody knows. All cool? And if you need the pricing, I believe, as I said, it's $40 for individual. Let me get the pricing somewhere here, but you'll find it on the site. It's pretty straightforward. Anybody else have any ideas or concerns? No? We'll do this next week then. I'll repeat. Was it repeat, rinse, and recycle, or whatever they say about laundry? Yes, of
All
course.
right, great. Thanks, Brian. Appreciate it.
No problem. No problem, Greg. Thanks for coming out, Greg. Sorry about that again, Greg.
Thank you.
Thanks, Fred. John, appreciate it. Rinse, repeat. Yes, thank you. Thanks, Sharma. I appreciate it. Thanks, everyone. Okay, I'll definitely repeat it next week. And we'll do a Roger now. I'll put this up on YouTube because this is another good session. Alrighty? So,
right.
Anybody want to say anything last minute at all? Maybe no? Okay, why don't we wrap her up? Thanks again, Greg, for coming out. I know you don't come out to the tech stuff, but I appreciate you coming out to this one.
Anytime, thanks.
Same with you, Shalom, and everybody else.
No problem, Brian. Thanks again.
I'll talk to you guys later, and hopefully I'll see you next week.
Yeah, super.
Have a good night.
Good night.
All right, see ya.